Today, crypto's on the move as the Fed cuts rates for the first time since December. A group of Democrats ask if crypto and AI czar David Sacks has overstayed his job. And Dragonfly's Rob Hadick discusses increased investments in stablecoin companies. Welcome to CNBC's Crypto World. I'm Talia Kaplan. Digital currencies are whipsawing after the Fed announced just this afternoon that it's cutting the Fed funds rate by 25 basis points, its first rate cut since December. The central bank also signaled that 2 more cuts are coming before the end of the year as concerns around the labor market grow. Just after 2 p.m., Bitcoin fell a little under 0.5% and traded at the $116,000 level. Ether gained 0.4% and traded at $4,507, while Solana was little changed at $237. Of course, things are changing quickly, so head over to CNBC.com for the latest prices. Okay, let's talk about the top stories. Senator Elizabeth Warren and other Democrats are questioning whether crypto and AI czar David Sacks has stayed in the job too long. The senator from Massachusetts was joined by Congresswoman Melanie Stansbury of New Mexico and a group of other progressive lawmakers in sending a letter this morning asking Sacks to account for how long he'd been at his post. Sacks was designated a special government employee, which comes with a 130-day limit for the job. Those Democratic lawmakers say overstaying that limit would raise additional ethics concerns as the Trump administration pushes for more changes to crypto regulation. A spokesperson for David Sacks says he carefully manages his special government employee days to stay under the 130-day limit. You can check out the full story over at CNBC.com. Next, Bullish, the crypto exchange that went public last month here in the U.S., just secured a license to start serving customers here too. The company announced today that its U.S. digital asset trading and custody business was granted a BIT license and money transmitting license by the New York Department of Financial Services. The new license helps the company clear a major hurdle in offering spot trading in digital assets and crypto custody services. Bullish CEO Tom Farley said in the release that the license was a testament to the company's commitment to compliance and building trusted infrastructure. Last, former SEC Chair Gensler joined CNBC's Squawk on the Street this morning, where he addressed concerns on the current state of the crypto space.
For investors, everyday investors, the 5 to 10% of Americans who invest in crypto, and it's hard to get the real, but that it's a highly speculative, very risky asset, and in most of these tokens, put aside Bitcoin, but most of the other tokens are not tied to any fundamentals, and there's 5,000 or 10,000 of these tokens.
When asked about the enforcement actions taken under his leadership, Gensler affirmed that he believes it was the right decision and mentioned that his predecessor, Jay Clayton, also brought forward many cases in the field.
We were consistently trying to ensure for investor protection, and in the midst of it, we had a lot of fraudsters. Look at Sam Bankman-Fried, and he wasn't alone.
Now, many in the industry celebrated Gensler's departure from the agency when President Trump took office. The crypto community criticized Gensler for his regulation by enforcement approach, and many of the cases have been resolved or dismissed under current chair Paul Atkins. All right, focusing on crypto VC trends for our main story. I spoke with Rob Hadick, general partner at the $4 billion crypto-focused investment firm Dragonfly, about the increased interest in stablecoin companies. He also discusses other growing crypto VC trends. The Dragonfly team analyzed all of your deal data over the past few years and found that the bulk of the investments are now for payments and stablecoin companies with no signs of slowing down. What do you attribute this trend to? Stablecoin deals have dramatically increased this year alone, and we're not even done with 2025. I'm assuming the Genius Act stablecoin bill becoming law a couple of months ago has something to do with it?
Oh, absolutely. I would really chalk it up to 2 different things. One is the Genius Act, as you mentioned, and the general acceptance of stablecoins more broadly in Washington, D.C., and within kind of the more regulated universe, both here and abroad. But then I would also really chalk it up to what we've seen from the institutional adoption side. So last year, we saw the amount of stablecoins used for cross-border payments go from what was almost zero in the beginning of the year to over about $100 billion, right? It's a relatively small number, related to the $200 trillion cross-border payments market, But we've seen that growth be 30%, 40% month over month as institutions have decided that they want to interact with stablecoins. That resulted in Stripe doing a couple of acquisitions with Bridge, and we've seen a couple more since then in things like Ripple and Rail, and Ripple also acquiring Hidden Road. But as that just tailwind has really started to pick up behind this institutional adoption of stablecoins, the amount of VC interest, the amount of investor interest has also picked up alongside of it.
What else have you noticed has changed since the Genius Act stablecoin bill became law here in the US a couple of months ago?
So I talked a little bit about this, institutional interest. Well, I can tell you that I know for a fact there's at least 12 Fortune 500 RFPs out in the market right now for large institutions, large companies, enterprises who want to go and use stablecoins as part of their treasury management solutions. So what we're seeing is that you can go to the biggest payment companies in the world, you can go to the biggest companies in the world, and they're saying, we want to use and we understand that using stablecoins is good. We understand that it's going to help our business. We understand that's going to save costs. And now we're also seeing people understand that it will also drive new revenue. And so that's one of the things that's, I think, really exciting. We see things, we invested in a business called Rain, which raised a 58 million Series B and announced that a few weeks ago. And that's one of the first of its kind, essentially credit cards that uses an entirely on-chain workflow in utilizing stablecoins and settling directly with Visa in those stablecoins so that you never have to touch a bank if you don't want to, right? And that is something that is new and novel and has never existed before. And people are starting to wake up to why that is valuable.
So let's zoom in on some of your numbers. In 2021, the number of stablecoin and payments deals came in at 156, jumping to 226 in 2024. And for this year so far, that number stands at 115, accounting for nearly 8% of all deals, the highest percentage since 2021. Also, the amount raised this year from stablecoin and payments accounted for about 14% of the total amount raised. Were you surprised by this data? It sounds like the answer is no, but what do these figures signify to you?
Yeah, we weren't surprised at all. And it's been, probably the biggest theme for us as investors as well. I think one of the things that's really interesting there is, that kind of dichotomy between, okay, well, 8% or so of the deals through the first two quarters was, in stable coins, but 15% or so was in the amount of capital invested. And that's because of the amount of just essentially adoption that is happening in those enterprises, in those businesses and institutions. So you're seeing, real product market fit. And so those companies are doing, Series A, Series Bs. It's not just seed rounds anymore. It's not just the earliest of stages. I mentioned Rain, who did a $58 million Series B. We invested, there's another portfolio company of ours who did a $50 million Series A earlier this year. Other companies like, and that one's called Agora, but other companies like M0, other companies like Plasma, like these are all stablecoin infrastructure that are raising a lot of money on the order of magnitude of $50 million plus because they're seeing just adoption that everybody is excited about from the investors themselves, but also the users, right? And this is one of the few areas in crypto where we've seen that adoption just pick up in a way that has gotten everybody excited, even outside of the crypto ecosystem.
Can you take us through some of the key use cases involving stablecoins? What has been generating the most interest? I mean, yesterday I spoke with EY America's digital assets solution lead about a new report focused on stablecoins, which noted that B2B cross-border payments is proving to be an early use case showing value. Is this something you're noticing too?
Yeah, B2B cross-border is one of the fastest growing areas. I mentioned earlier that I believe that to be about $100 billion of volume last year. That's picking up the pace quite quickly. We did a report with a business called Artemis that tracks some of these stablecoin payment movements. And we track about 30 companies. It's not the whole universe. It's just a small subsection. But the amount of cross-border B2B payments that was happening in stablecoins had doubled from May until August. About $6 billion annually for that small subset of 30 companies. So I would expect it to be, based on what we know of the universe, on the order of magnitude of something like 3 to 4 times that monthly, right? And so that's telling you we're close to something like, over $200 billion, right? Or doubling last year in run rate. The other thing that we've seen is essentially emerging market usage of stablecoin backed cards, people who have demand for US dollars, who want those stablecoins, who are now starting to spend those US dollars versus just save them. So stablecoin backed cards, stablecoin backed neobanks, those are things that are starting to really pick up steam in terms of usage across the emerging markets, and really also investor interest. Those are some of the biggest raises that we've seen this year as well. And the last thing we've really seen on the stablecoin side has been remittance. And so by some data from Artemis, who I mentioned earlier, they showed that as much as 10% of all cross-border remittance peer-to-peer was happening in stablecoin rails between the US and India, about 8% between the US and Mexico. Those are two of the biggest corridors in the world for remittance. And so we're really starting to see this demand and comfort with stablecoins in those emerging markets and going cross-border from the US to those emerging markets, whether it's businesses or consumers alike.
Now, earlier you mentioned digital asset treasuries. We spoke with Pantera Capital's general partner earlier this week, and he noted that DATs are getting a lot of interest lately. This week, Pantera announced it closed more than $500 million in funding to launch a Solana-backed digital asset treasury called Helios. Are you also noticing increased interest in DATs?
Yeah, absolutely. There's been what I would call a real acceleration of investing in and interest in these digital asset treasury companies really the last 4 months or so. Obviously, Michael Saylor and Strategy have been doing this for a long period of time, since 2020 or so. But it's started to really evolve with other types of assets, the Ethereum, Solanas, Athenas, Avalanches of the world, who now have out of a lot of interest from institutional investors who want exposure to real world assets or real world things happening and building on blockchains, who want exposure to stablecoins, who want exposure in these kind of public market wrappers, who are more flexibility to do, interesting yield bearing type activities or, interesting type of activities on chain and offer them, but in a product that they're used to in equity, right? And so we're continuing to see a lot of interest there. And I think the interest in September has probably been at an all-time high.
Okay, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.